Zuschauer, ganz herzlich willkommen zu Inside Wall Street vom Parkett der New York Stock Exchange. Eine spannende Woche liegt hinter uns mit dem schwarzesten Tag des Jahres. Über 350 Punkte hatten wir am Donnerstag ja verloren, am Freitag die Märkte dann freundlich gestartet. Und bei mir ist Warren Meyers of DME Securities. Thank you so much for joining us, Warren.
My pleasure, glad to be here.
It was an exciting week. We saw Ben Bernanke, the Fed chef, speaking on Wednesday, and I think he didn't say anything new, but the market reaction was so big.
I agree with you. I'm glad you actually said that. The only change or anything different that I saw was when he was talking and answering a question and said that as early as the end of this year we can start tapering. But that's basically been the unwritten word that's been out there this whole time. If the economic data warrants it, they'll start to taper and cut back. If it doesn't, they won't, and they might even add. So basically he said nothing new. I think the fact that he actually mentioned a time frame this year spooked a lot of people and scared people, and that's why we had this significant sell-off we sold over the last few days. But if you take a step back and look at it, I don't see there's any change in philosophy whatsoever.
So the question is, we saw the pullback on Wednesday, but on Thursday was a black day again, even more, 350 points we went down. Why is the market reaction this time so bad?
I think it was a combination of things. I think it was an overreaction to what Bernanke said, number one. Also on the heels or coming in a day before a big quadruple expiration, Friday, helped exaggerate some of those moves. People that have positions continue to add to those positions, and I think that exaggerated the downward momentum. And then also there was some news out in the last couple of days about China that I think had an impact as well. So it was probably the combination of all three that really led to that over sell-off that we saw on Thursday.
So how should an investor at home react in these days?
Well, first of all, I think the normal rule of thumb is you don't trade on the daily information. You need to be a long-term investor. And if you look at this in a broader perspective, I think that this sell-off actually is probably going to give you an opportunity to add to your long positions, not necessarily wholeheartedly, but if you nibble and pick and choose your prices and your stocks right now, I think in the long run you'll be in very good shape. So I wouldn't get scared off by these sudden movements that we saw, but look at them as potential opportunities to add to your long position. If you believe that overall the economy is really going to struggle and we're not going to make it and the Fed is not going to support that, then maybe you lighten up. I'm not a believer in that. I think the economy is improving, albeit not as fast as we want. I think the Fed will be there as long as necessary until the economy gets going. And if you believe the way I believe, then you should add on any of these big drops.
So these dips are a good buying opportunity. Do you see any sectors which are interesting?
I'll put it this: I think as a hedge in a possible higher interest rate environment, I think the insurance companies would be a place to put your money. I think the financials as a whole can be not a bad group. They haven't performed significantly any better than any other group. As a matter of fact, underperformed a little bit. I think they have potential to go up. Technology, I would be a little concerned about if the interest rate environment does increase. I think companies might pull back a little on that spending. So those are a couple of areas I'd look at, and one that maybe I would lighten up a little bit in.
What do you expect of the upcoming week? Do you think the markets will still go down, or will we see an increasing market?
I think once the dust settles a little bit, and that may be another week or two for everyone to kind of take a cumulative deep breath and reevaluate. We're going to continue to see some of the volatility that we've been seeing over the last 2 weeks or so. Maybe not quite as significantly as we saw this week, but I think still some up and down movements. We have some numbers, data coming out in the U.S. next week. I think the GDP number middle of the week is probably the one that most people are going to focus in on. We also have some housing numbers and some sentiment numbers as well next week. But the GDP number, I think, will be an indication to say, is the economy moving as we think it is or not, either better or worse. I think in this instance, a worse number might be better for the markets because that might be the signal the Fed is going to continue to push off any tapering until next year, and that's good for this market.
Bernanke said for this year he thinks it could be maybe a little bit go down, the growth, and next year it will go higher.
That's what he said, and that's what's very interesting is they lowered their growth expectation of the economy. At the same time, he said we might cut back on our bond purchasing, which are very contradictory comments. And I think that one of the Fed presidents pointed that out yesterday, as a matter of fact. And I think that again is another signal that maybe Bernanke was under pressure to put some kind of time frame on it in his comments, even though maybe they don't believe that that's going to be the case. And obviously, if they're going to lower their economic growth expectations here, there's no reason in the world they should be cutting back on their bond purchases. So again, that's another reason in my mind that the Fed will hold steady through the end of this year, and these dips are a good buying opportunity.
So in the end of next week, will we be lower or higher?
If only I had my crystal ball. To be honest, I think most people think the way I do, or at least I hope that they do. And I think, therefore, we'll probably be up a little bit higher than here. We had a pretty good sell-off in 2 days. I'm not expecting a completely recovery today, especially being a quadruple witching. I think we're going to have a little bounce around. But I think the trend is still up overall, and I think next week we'll see a little bit of an improvement from where we are now.
We had this whole discussion about the NSA, and we heard there were maybe some attacks here on Wall Street planned, and we have the security here. So do you feel safe here at the New York Stock Exchange?
I feel very safe. It goes to show you the quality of the security, not only in this building and in this New York area, but overall in the United States. The fact that no one here really knew about any of these threats until well after the fact. Obviously, after 9/11, you were very concerned, and you thought about it a lot. When this alert came out that they in fact stopped this plot, yes, it brings it to the forefront a little bit, and you think about it again. But at the end of the day, I have not worried about coming in this building. The security is very good, and I know that if there was an imminent threat of any kind, they would do everything in their power to alert us and keep us safe. So I feel very comfortable coming in.
Meyers of DME Securities. Thank you so much for joining us. Und Ihnen, liebe Zuschauer, danke fürs Zuschauen. Bis bald hier vom Parkett der New York Stock Exchange.